So welcome guys for second day of Alpha Learners Day, and today I'm going to present an emerging defense company. By the time second presenter take over around her scheduled time, and as we know, Anup has some problems in the internet, so I will be taking over for the another company in the meantime. So I would be presenting an emerging defense company called as JK Enterprises. My key investment thesis for the company is it belongs to the defense and aerospace sector, and it involves in precision manufacturing with big customer support. It involves in designing, development, manufacturing, and testing. So it basically end to end. It's trying to do the design, development, testing, everything. And the materials which it is using is fiberglass, glass made, plastic, resins, and these have applications in the defense, aerospace, logistics, and electrical industries. Company also have a good capability in additive manufacturing, which is called as 3D printing in today's world. And it is also trying to develop the software systems to support the above venture. That is my key investment thesis. A company which is into defense, having 3D capabilities and software systems to support its venture into that domain. This company belongs to JK organization. Okay, and it's part of 139-year-old diversified JK conglomerate. Initially, it started with manufacturing nylon and acrylic fibers and went into trading, and then it shifted its business to registrar and share transfer activities. And presently, the company has diversified into 3D manufacturing, prototyping, powder metallurgy, large scale digital manufacturing. And in the area of defense and aerospace, it's trying to focus on engineering products along with software designing. So the product segments which it belongs to, there are roughly four segments currently for this company. First is defense and aerospace. Second is digital manufacturing and advanced systems. Third is software and services. Fourth is real estate and hospitality. Now the fourth one is a little bit tricky. It is more of a diversification. I would not say it is diversified, it's diversification, but we have to take the company whatever they're trying to do. Now here they are trying to do certain things, but before that we should understand about management. So Mr. Abhishek Singhania is leading this company, is a promoter, chairman, and MD, and is belonging to the business family of India. Initially, he is the co-founder and served as the MD of JK Technosoft. So this is the software company which they are trying to build and integrate with the JK Defense, basically. And he has invaluable experience into multiple organization companies. So I think this experience comes handy when we are trying to venture into something new. So he has rich experience in IT services plus the core sector industries like textile, fiber, cement, chemical processing, as well as in the discrete manufacturing. So he understands the full cycle of software, and he has a big, he is coming from a big family which is into business from so many decades. So I think that experience will definitely help in carving a new business opportunity here. So the company's strength is possibly the biggest strength is the trusted brand name. So we could be a little bit sure of okay, it belongs to a reputed name. What they're trying to do is the in-house research on the multiple things. Wherever they are not able to do, they are trying to acquire the companies from that. Objective is to support defense and aerospace programs or make in India with the local content. And opportunity wise, make in India, I think, is the biggest opportunity for them in the defense sector. Second sector, which is coming up and is in infancy stage in India, is 3D printing, which is also called as additive manufacturing. So this 3D printing using softwares and giving the output products to different sector is what my whole key thesis belongs to. Weakness, yes, there are issues in the past. The sales has been almost nil, and the cost of capital is really high for this kind of company. And it depends upon the customer itself, and there is an increasing competition in the organized sectors itself. Some of the fundamental ratios that we can see is company is around 1000 crore market cap. And if you see from 2016 to 2021, sales are almost 30 lakhs. It's almost nil, while the expenses are much higher. So that means fixed expenses are much higher, and the company was continuously making losses. Only from the other income from various sources, it is able to generate some profits across years. What has changed last 2 years? You can see the main revenue source has gone from 30 lakhs to 52 CR. That's a huge change, and they are trying to come up into a field which is much desired for Make in India. Still, other income is high, and I believe it will become the percentage of the other income will become lower as we grow forward with this company. So basically, it's a turnaround company for me. It may fail badly, and it's a kind of a risky bet at this point of time. But the sector tailwinds is too big, actually. I would say sector tailwinds is too big, so I cannot ignore that company. So sales and profits are catching up. ROC, ROE around 10%. Debt to equity is under control. So they have raised the funds earlier, and now they are also coming up with the rights issue. Promoter holding, you see, it was 41% 2-3 years back, and they have increased the stake. So that means promoter is also bullish now, and they have a good skin in the game at around 56% shareholding, and the stake is increasing continuously. Public stake is decreasing. Cash flow from operations, big negative. At this point of time, you can see there are big negative numbers in this. But for the turnaround companies, that's how it is. So last time, I think 2 years back, we have picked Schneider Electric, and that was around 120 rupees. Almost similar situation, very bad cash flows. It was a loss-making company. Currently, it is trading at 1000 rupees, and it has fully turned around. So the risk while picking such companies is only 1 out of 10 companies will turn around, 9 may fail. So while you are reading this or listening to me, just keep in mind that there is a 90% or more than that the probability of a company failing that. Now we understood the basic background of it. Now what are the triggers which has caused me to come to this company? So one is the macro trend, defense and aerospace sector. It's looking very positive outlook for this sector, and the domestic make in India is the biggest theme which is going on in this sector. It's not on the paper, but in actually the exports are increasing and imports are declining to an extent, but actual impact might be visible in 2 to 3 years, whatever the government and the companies are trying to do. So there is a notification by the government that any orders less than a certain amount, let's say 100 crore or 200 crore, most of these orders should be given to the SME or MSME companies inside India. So that notification has triggered a lot of change a year or 2 years back. Now this segment is estimated to reach around $70 billion US dollar by 2030. And with the focus on the Make in India, the sourcing will increase. Additive manufacturing is also increasing, and government of India is coming up with a policy for this. So the early entrants will have an advantage for this part as well. So this is the macro trend. On the joint ventures, JK Defense has entered into partnership with leaders in 3D metal design and printing. So here they have got association with US, Singapore, and they have incorporated a joint venture company there, which is into the business of 3D printing. Apart from that, it has many subsidiaries. So there is a small mesh of subsidiaries. One part of the mesh is belonging to defense and aerospace. The other part belongs to digital printing and advanced system. And that's where the combo is coming into picture for us. The major highlight which we want to be focusing on are two companies out of this. One is Numesh Labs, the first one, and the fifth one, which is LN Reinforced Plastics. So these are the two major subsidiaries from which I think the business will be generated in the coming time. So Numesh Labs has been established in Bangalore, and its purpose is to make software machines and the cutting edge 3D machines. It has developed 3D printers, which is recently has been highlighted in MTech Fair in Bengaluru, called as JK Print 500. It is a little bit costly. So what they're trying to do, they're trying to bring down the price and creating the other set of printers, which is called as JK Print 300, basically. So it will be used for prototyping consumer goods, automobile, and architecture for the low volume production. Now, if you understand the difference between 3D printing and normal CNC machines, so CNC machines, you put a block inside and it will churn the unnecessary part and carve out a particular block of a shape which you want. 3D manufacturing builds it from the scratch. So there is no wastage of the material. While in the CNC, wastage of material is high. Speed of CNC is very high. Speed of 3D printing is very small because it is building block by block. So only in the lower volume productions, 3D printing could be useful, but it will lead to precision manufacturing. It will lead to the exact requirements what you need for that product. So it India cannot, or even the world cannot survive on one technology. It has to be both CNC plus 3D. But the moment 3D coming with effective technology, lower price, I think its adoption will increase in automobile space, in the aerospace defense sector as well. So this company, Numesh Lab, is doing this business and increasing its scope. They are collaborating with the government Make in India program along with multiple engineering colleges and some of the other companies to establish that and give that head start. So we might be very, very early in the 3D printing stage in India. So maybe 3 to 4, 5 years down the line, we'll start speaking more about it. And this company has a head start in that business. So the next year, I will be possibly trying to join here and see the kind of printers what they're trying to do. Another company which I'm telling is to focus on is Allen Reinforced Plastics. So this company already has been supplying critical components to defense projects, BrahMos, Pinaka, Smile, Akash missiles. Allen Reinforced Plastics is already giving the materials to these companies for this kind of products. So the customers here already associated DRDO, ISRO, FB, BHAL, BDL. Now JK Defense has acquired the stake directly into this company. Initially they started with 76%, and recently the stake has been increased to 92.92%. So effectively it is almost 100% acquisition of this company, Allen Reinforced. So basically directly now, while they're pushing to go towards defense sector, they have acquired the company directly instead of starting from a scratch. That's what they are trying to do here. And then they have taken a 5-acre land here in Bangalore from government of Karnataka, and the purpose is to make the components and engineering good for defense and aerospace sector. So this approval of the land is done, and the place where it is mentioned, the Devanahalli, is nearby, around 20 kilometers from my home here in Bengaluru. And this is the space where a lot of aerospace development is happening basically. The other company nearby, DCX Systems, also belongs to that space. Some of the other companies also, I see that that space is developing very nicely. So this is a deal basically. So 5 acre basically land is procured, and the further expansion, you have the land available to make it faster in terms of manufacturing facility or keeping a new production line. So I think Allen Reinforced would be really, really useful for this company. Other thing which they have done by acquiring 99% stake in another firm, which is again supplying some parts to the defense equipment manufacturing industry, is Silver Gray. So Silver Gray also has customers like HAL, Bell, Gas Turbine Research, Aeronautical Development Agency, Tata Advanced Systems. So this company also has very good customers from this sector, and JK has acquired that company also. So just a representative image of 3D printer, how the components would be made here. This image I have generated from AI basically, and it's not an actual image, but this is how the 3D printing will be done. You feed the software on the design and it will build it up basically. So this is the kind of um, a trend basically which will be catching up soon, sooner or later. Another company which they have incorporated is digital and advanced systems. So this is for the software. So they have to develop the software for this 3D applications. What is the opportunity size? So India has made 3D printed semi-cryogenic engine recently. If you have heard this news, ISRO has launched this 3D printed semi-cryogenic engine 2-3 months back. And it will have the flight control systems. It will demonstrate this power of Make in India along with 3D printing. So 3D printing is expected to grow at more than 20% CAGR for the next few years. And coupled with the defense and aerospace sector, I think we are looking at a very big opportunity size. Okay. The technicals on 6th July, again, this I researched on the last week itself. Technical shows a good breakout from the flag mechanism, the flag pattern, breakout done, retesting done, and recently it is last Friday itself, it has gone back to 164. So basically, the last red candle has turned into the green candle on last Friday. So it is coming up with volumes, and we see the last few times when the stock started running away, it has good volumes in its support. So I believe we are able to find something really good turnaround company. Yes, there is a probability to fail, but scope is really high if it is able to venture into the right space. So the first time on 18th June, when I am trying to find out, so my entry is around 130, 140 levels, and I'm still building up my position further on this company to complete my allocation. So this is on the technical part. Risk part, operating cash flows I have highlighted, they are not good. Working capital days, cash conversion cycle, everything is not up to the mark. Outcome is high valuation of this company at this point. But as I said, things look really bad before they turn decent and then good and then turn very good. Whether this company belongs to the last sentence, we need to wait for the right time to see, basically. Chances of turning, we know that only 1 out of 100 companies might survive. Rest of the companies bites the dust. Other income is high and it is skewing the PAT till now. We need to be very careful of if the other income is going down as a total percentage of the total income itself or not in the coming quarters or the years. New business division of defense is not taking off as anticipated. That would be another risk. Limited customers already, competition is high, and related party loans to subsidiaries. So they have started giving loans to the subsidiaries to acquire those companies. Like JK Defense has one of the subsidiaries which has acquired Allen Reinforced Plastics. Now this loan can be waived off later, right? We have seen this kind of situations in many companies in the past. They are waiving off their loans and it directly impacts the holding company. So this risk I cannot ignore at this point of time because I have seen the past of many such companies where the loans are being waived off. So these are the risks associated with this company. Not much details are available on the screener, but I have tried to put up my thesis around two of the companies which they have acquired with the software systems and the opportunity size in 3D manufacturing and Make in India. That's where I am trying to pitch in this company, basically. So we just tried to utilize 20 minutes and I went a little bit fast to cover up for Anu. But if you have any questions, please let me know for this.
Puneet, I had one question about this 50 from lakhs to crores, right? 53 crores. That was the sales you said, right?
Yeah.
So do we know the sales are coming from which segment, or is it 3D printing sales?
So it is coming from Allen Reinforced Plastics, the company they have acquired. This one.
So it is that acquisition sales that they're showing in the balance sheet.
Yes. So it is coming from both the acquisition, Silver Green and Allen Reinforced. So currently, whatever they had nothing basically in the past. So they are banking upon these companies for their sales now.
So are they related companies? I mean, they were subsidiaries earlier, or there are some third-party companies?
They are another company. They have just acquired it. They are not related before.
Okay, okay, thank you.
One question put here on
Hmm.
other income. Like typically, we see this in balance sheets. So, what is usually the source of this other income? In this case, specifically very high, as you mentioned.
So they have certain money which they have put in FDs, and they have some trading businesses. They have some trading business from which they are getting this money actually.
Okay.
But this money should go down in the coming years as a part of total income.
Okay. Yeah, thanks, Puneet.
Yeah.
So, Puneet, this acquisition, they were more fueled by debt increase, is it?
Sorry, come again, Amar.
I was asking these two acquisitions which they made, na, they are directly contributing to the top line, bottom line. Where
Yes,
did they
yes.
get the cash from? Is it fueled from taking on more debt? That is already very high on
No,
that
no.
one.
So no, they have put a preferential warrants for the promoters in the past, and then they have come up with the rights issue, and now again they are coming up with rights issue. The record date is 19th July for that. So they are acquiring the funds for basically doing this expansion and acquiring the companies.
But in the rights issue, if the promoter participate, then they also have to shell out the money, no?
Yes,
Otherwise, it is a dilution.
correct. So promoters have shelled out in the past, and the next right issue is coming up. We have to see whether the promoter is shelling up again or not. I hope they will do this. Otherwise, it could be another red flag for us.
Yeah.
Hi, Puneet. Good morning. So, just to summarize this, they will be banking on this 3D printing, right? For their future revenues, highly.
So what they're trying to do is already a company is supplying some parts to aerospace and defense, and the other businesses selling the printers in the market to the companies which will supply to the automobile and defense sector. Can they use 3D printing inside the house for doing their sales? Possibly, yes. For that, they need, I would say, advanced softwares, and that's where they have set up a software company also to support this initiative. So I think actual picture would be clear around 1 to 2 years down the line, where they are able to capture the all the things of 3D printing plus software in-house for the development of this product. I think the picture would be clear in 1 to 2 years as of now. Thesis wise, yes, I would like to believe that they should start using it for certain components, if not.
So, 1 to 2 years down the line, 3D printing, do we have any current players already in market for
It's a
the?
it's a very niche space basically. Even the Mac Power trying to do Mac Power CNC company, they also understand this 3D printing is required. But when I asked this question 2 years back to Mac Power team, they said we are in a very infant stage. And now things are picking up. Now, if you go back to Mac Power management, they will tell, okay, yes, we have started to look into it. So it's a very slow growing field at this point of time. I would say it's not even born in India that way. But if you look outside India, you see even the houses are being built with 3D printing itself. So this space will catch up, but not for the high volume production because the speed is really slow. So software or the hardware has to catch up to make it a big part or the major part of the company. So I would not like to believe as such that it will become the major part of the sales, but they would start selling these machines by building it to third party or some other companies for their usage. That might bring some revenues to this company.
So, Puneet, again here, one or two things that immediately comes to mind. It might be possible if 3D printing can popularize before it picking up, people start, importing from outside if they really see a value around this. And secondly, if they take it, this 3D printing, their software development lifecycle will be so huge. Maintenance is, altogether a different initial, phases will have its own issues and challenges. So this is one, kind of blockers I can see here. But again, I am for till the time 3D printing comes up, what are I'm sorry if I missed, what are the 1 or 2 revenue generation areas for them, which we can see that there will be some upticks until
So for that, I understand your point. For that, already the silver gray and iron reinforced already supplying materials to defense companies, HAL, Bell. So this revenue will keep on coming by that time.
okay. Okay, okay. So means they are banking on this 2 acquisitions that they have done, and okay.
Yes.
got it.
So that's what the thesis is. It's a really turnaround company for us. It may fail, actually. It may belong to 99 out of 100 companies which fail generally. So I given a good thought to share or not share, but I think we should also learn while sharing in Alpha Learners Day how to look at this kind of companies. That was the idea. Any other question, guys? I would be happy to take. Otherwise, you can put in the chat. And if you look at the chart has turned really bullish already. So please look at the chart also. Okay, if no more questions, I would drop off and then hand over to Rashmiji. Rashmiji, are you ready?
Yes, Puneet.
Okay, great. So let me give you the rights to share the screen. I hope now it should be available for you to share.
I'm just checking. Is the screen visible?
Yes.
Thank you. Happy morning, all. This is Rashmi Patel, and I am presenting the stock called Krishna Defense and Allied Industries Limited. It is basically a defense sector, and yesterday also we saw Walchand Nagar to be a defense stock, and this is just a 2-year-old stock listed on the, came as IPO in 2022. And this basically is a company which has started in 1996-97 by Ashwin Shah, and it was incorporated on September 2013 and finally listed into the stock market in 2022. And it has basically 4 verticals, that is defense equipment, dairy equipment, mega kitchen equipment, and security equipment. Actually, this stock is something that they started with the intention, they started with 10 lakh capital, and they just wanted to help the farmers out there, particularly the dairy section. So all their equipments, the starting from whatever they started in 1996 and 97, everything was related to dairy. And even the word Krishna Defense, the defense word has been recently added to the stock name. And eventually they shifted to dairy. From dairy, they shifted to defense. And now the total revenue of defense is 3 to 4 times of dairy revenue. And here it is it is the supplier of army as well as navy warships and whatever ammunitions we need. And as far as dairy is concerned, they were actually into making the steel cans so that the hygiene can be maintained. And also they were also into testing of milk adulteration also, including the milk fat. And this is their presence geographically. They are based in Gujarat, that is Kalol and Halol. And in Kalol, they have 40,000 square foot for exclusively dairy equipments, and Halol, they are into 60,000 square foot. But since they are expanding the defense sector, I mean defense equipments, they are acquiring more of land again in Halol. And very recently, that is last year, 2023, they also started in Bangalore, that is electronic manufacturing and testing lab here of only 2,000 square foot. They intending to expand even more. And these are the board members, like Ankur Shah, he's the next generation continuing this company, and Piyush Patel, and these are the board of directors. But as far as going personally into their history, they have done pretty much better, and they have a good history. Ankur Shah is an engineer, it's a production engineer. Studied from Bombay, and this headquarters of this Krishna Defense Allied Industries in Bombay. And here is the brief history how the company started. I'd just like to, 1997 to up to 2023. So this is how they started. Ashwin Shah was the main person who started with 10 lakh manufacturing, 10 lakh capital for manufacturing milk cans for milk hygiene with only 12 employees, and today I think it has more than 120 employees. So he in 2006 he took over to manufacturing of Bulbar. Bulbar, I'll explain it later. Like this is one equipment that has changed the total fate of this Krishna Defense stock. So they set up a R&D even for the milk also, because they were more into like hygiene and also testing of adulteration. But now it has expanded to other aspects. And 2006, when they entered the trade with the Defense Metallurgical Research Laboratory, that is DMRL, Hyderabad, for shipbuilding steel section. Since they were into steel products, they entered with this deal. And 2008, they got recognized by the same, that is DMRL, for the bulbars and naval warships. And 2014, they were awarded the Defense Technology Absorption Award by PM Modi. And 2017, they again received the approval for American Bureau of Shipping. And 2018, they were awarded India SME 100 from Ministry of MSME. So they kept on rising. If you see the history, they are been rising since then. And 2019, they signed 3 trade with Dispatch DRDO, New Delhi, for consumables for supplying the weld consumables for Navy. And what are these equipments? I'll be explaining them. And 2020, they entered into the new business of Homeland Security. That is another vertical, that is Homeland Security equipment. And 2021, they signed again trade with R&D DRDO, Pune, for IED containment vessel and ballast bricks. And 2020, they were listed into the IPO, they're listed into the share market. And 2023, they established an associate company in Bengaluru for electronic tactical communication converters. So this is how they their history is past 30 years. Yeah. And why I chose this particular company to present here in ALD is this, though it is just a 2-year-old company as per the listing, but it has a past 30 years of history. And as far as going with what government intends, from past 5 years, defense exports have grown up to 334%, and we have been exporting to 75 plus countries. So this is the past 5-year history, but whereas the next 5 years, Defense Ministry estimates the potential contract of 4 lakh crores rupees for domestic industry. That means as far as the defense is concerned, they are intending to have more Atmanirbhar businesses, and they also, as far as defense is concerned, they also want anything and everything manufactured in India, and they want to reduce the import. So present allocation for defense in interim budget was 6.21 lakh crore. That is almost 13% of the total budget. And there's an increment of 4.72% compared to last year budget. And DRDO itself has been sanctioned 1 lakh crore in this year budget. And this company has a is in very good deal with DRDO. And by 2028 and 29, government has a target of 50,000 crores worth of annual defense export. So we are intending to reduce the import. We are intending to produce more of Atmanirbhar, that is home-based products and equipments. And we are also intending to export our defense equipment to other countries. So government has established 2 defense industrial corridors in Uttar Pradesh and Tamil Nadu, where as in each is expected to attract investment of 10,000 crores. And what is the vision for this? So it is, vision is to establish India among the top 5 shipbuilding countries. And as far as defense is concerned, India stands 3rd next to Russia and USA. And as far as the warships are concerned, we already have 132 warship right now with us. And government is intending to increase it up to 175 warships by next 6 to 7 years. And here we are manufacturing for, when we compare to other countries, that is our neighboring country, China is producing, manufacturing 14 warships per year, whereas we are manufacturing only 4 warships. So we all know that from government perspective and from the security perspective, how much defense sector needs to be concentrated, this itself says. So financial year 2024 to 2025, the growth guidance can be 900 crore, and by 2027, revenue is expected to be 2,000 crore as far as this company, that is Krishna Defense, is concerned. And we may tell that since it is a PSU, then clientele is government, then how can we go ahead with this? But since it's a PSU, company is majorly owned by government, and they often attract investors seeking stability, consistent dividends, and growth potential. And investing in PSU can always be strategic for portfolio diversification for lower risk. And as far as defense is concerned, as far as overall other companies, when I compared, Puneet has already suggested one among the good companies in this sector. So we are already, we have been invested in that. And when I compared with that company, then there is another company, CFF, and some other companies are there. But almost all the defense sector companies are doing good. But how Krishna is still ahead of them and can do much better will be explained here. And this is the defense target by the government. And here, if we compare from 2017 to 2025, presently we are here. Here it is 21,083, whereas we are expected target is 35,000 crores of export. And how much is the allocation when we come to different countries? Russia is allocating 4.1 billion crore, and this is USA, and here we are 2.2. And when Manohar Parrikar was defense minister, he came up with the idea of IDDM. What is IDDM? It is indigenous design, develop, and manufacture. So whatever we do, we need the home-based companies. We need our own designs. We need our own development, developed products, and then manufacturing should be here. And since India is the 3rd largest defense focused country after Russia and USA, these are the targets by our government. So this is the defense production in India right now. What is the production rate is this chart is showing. And since I mentioned Krishna Defense, like it started with the dairy products, dairy equipments. So this contributes to this dairy portion, this contributes to only 14%, whereas 86% now, as of now, where they stand is 86% the defense equipments are manufactured by Krishna. So you can imagine the revenue generated by defense sector. And dairy, since it is something that they started with, they don't want to close it. And since it is also in auto mode generating a good revenue for them, they don't want to close it. But as per Ankur Shah, the present managing director, he is thinking to close it off, provided the defense and all the expected deals with other countries and with the present government goes well. These are some of the equipments, and this is called bulb bar, this is ballast bricks, and this is heavy vehicle factory steel. And here is something that is weld consumables, then welding electrodes and Bukhari. So these are something unique, which it hardly has any competitors in this area. So when I mentioned bulb bar, these are something that looks like this, and there are 19 different sizes of bulb bars what Krishna Defense is producing. And when we say of the revenue produced, first of all, defense sector itself is producing 86%, but in that, again, this particular bulb bar itself is giving it 50% of revenue. And rest 15 to 20% is given by the weld consumables. Bukhari, it is something unique. I'll be explaining it. So it is giving 15 to 20%, and other whatever equipments they are into, that is giving them the 10% revenue. And explaining each one equipment, how unique they are. This ballast bricks is, these are for balancing the ship, and also they're lightweight, they balance the ship, as well as they're not detected by the radar. And this is their unique product. 3-4 products are there which are quite unique to Krishna Defense, and it hardly finds any competitor with it. And Bukhari is something used as a room warmer, particularly whatever their supply is only for the defense sector. So particularly the high altitude regions like Siachen and all, where the soldiers really need to warm themselves. And till now, what was done is like the kerosene, what was used. By using Bukhari, the kerosene consumption has come down by 75%. Say, suppose you are using 10 liters, then you can use 2.5 liters. That is the emission of carbon monoxide, which is assumed to be the poison, that has been drastically reduced by using the Bukhari equipment. This is in demand by the army people, particularly for high altitudes. And door hatches, this is something that they have come newly, particularly for Navy and underwater platforms. The hatch, that is door hatch, whatever is used, the alloy itself is completely different. And for this, they have collaborated with Netherlands company. And I think by now the deal might have been done, or it will be done, because by July they were supposed to start the manufacturing of this. And even if the deal is done, 51% of stake will be held by Krishna Defense. So, and the expected opportunity for this is 200 to 300 crores in this particular project when it comes to door hatches. And this is a joke that if the bulb barbs were used during Titanic, the Titanic wouldn't have sunk. So you can imagine how good product the bulb bar is. First of all, bulb bar reduces the weight of the ship by 3 times, and also the speed of the ship is increased by 3 times. So it is an added advantage. And company started in-house manufacturing of these bulb bars in 2007, and it took 4 years to come to a particular quality, and it took another 2 to 3 years to get the government approval. And one competitor for bulb bar is the Star Wire, and it is not a public listed company, but when the tender is called, both Krishna Defense and Star Wire together apply for it, and the share is usually 40-60 or 50-50. And since government don't want to risk with only one company and don't want to go with a monopoly, but Star Wire is something that is a good competitor for only bulb bars. It's not overall products, only bulb bars. And when it comes to weld consumables, there is a company called Mitani, that is Mishra Dhatu Nigam Limited. It is a competitor for weld consumables, only for this particular product. And even it is an old company, started in 1973, and is a government enterprise. And the present price of this Mishra Dhatu is around 500 plus. And when it comes to weld consumables, it is made of titanium and chromium, and it is used for underwater platform welding, that is for Navy purpose. And the realization for weld consumables is 25 lakh to 1 crore. There's one more product called super rapid gun mount, required for naval gun mount in the process of government. It is still in the approval of government. And if it is done, then it has opportunity size of 1,000 crores in next 5 to 6 years. So if you are observing, like, each product is so unique, and they are just, some products have been approved, some products are in waiting list to be approved by the government, and some products, they are already in sync with other countries. So you can imagine the potential of Krishna Defense stock. Right. And there is one more product called Wave Optics. This, it has acquired 25% stake and may increase to 51% stake. So this, it builds testing system related to, I mean, what this Wave Optic, it builds testing system related to radio frequency and optical fibers. And if it is once approved, then the order size may be from 1,000 to 2,000 systems, whereas one system cost 9 lakhs. And the capex presently is 1,000 to 2,000 tons, and it may increase up to 4,000 tons from September, October. That is within this year. And one more good point is that government has decided that all defense related equipment should be manufactured by Indians only. That means whatever procurement will be there, it will be from the homeland, not from other countries. And when I was talking of bulb bars, till date, I mean, till very recently, the 100% import was from Russia. So you can imagine this has been completely waived off now. Like when either the bulb bars are taken from Krishna Defense or the Star Wire. The import has been completely stopped as far as this particular product is concerned. The risk management has asked to reduce working capital to less than 100 days. And also, since it's a B2G company, I mean, the clientele are all government, the payment might be delayed. That's the only drawback. But with the present government, that might not be an issue. And since we have a stable government for next 5 years, this company is surely going to bang on. And here is the process, like whenever there is a tender called by Indian Navy ships, then shipbuilding companies submit their bids. And when the contract is called, which are the companies that apply for this is the other, I mean, competitive companies with Krishna are the Mesgon Dock Limited, Cochin Shipyard, then Garden Reach Shipbuilders. These are the companies where, as far as the Navy sector is concerned. And whenever the lowest bidder is given, and who applies for that is approved RM suppliers like Krishna Defense and Star Wire. So you can see that again the contract is split between Krishna and Star Wire as 50-50 or 60-40. Yeah, and as I told, like this is the present allocation for financial year 2024, that is interim budget, it has already allocated 6.21 lakh crore for defense. So and we are intending to export 35,000 crore worth defense equipment. And as far as Krishna company is concerned, they have a lot of collaboration with other countries. This picture is not very clear, but they have too many collaborations with different countries within homeland, different companies. So the future for this particular stock is very bright. Yeah, and this is some what it looks like. This is super rapid gun mount, and these are the hatches, door hatches I was talking about, which is used underwater. This is the Bukhari, that is a room heater, and this is what that ballast bricks look like. And these are all very unique products of Krishna, and hardly have any competitors with it. And as far as talking about this company, it has achieved impressive annual EPS growth of 52% compound over last 3 years. And as for EBITDA margins for last year, revenue grew by solid 63% to 793 million. And that's really positive. Market capitalization is 4.4 billion. And company insiders hold 61% of the company. That is, the promoters to the present date, they are holding up to 62%. That is 2.7 billion. So their decisions have a significant impact on their investment. And company has an order book of 186, but this was up to March. But till date, if you consider till date, then it is 230 crores. And it has a CRISIL good rating too. And these are the fundamentals here, fundamental ratios, whereas the market cap of the company is presently 1,128 crores, and the number of shares issued are 1.37 crores. The P is, yes, a little high right now, and book value is 71.98, and it has a debt of 18.5 crores. And ROE and ROCE are pretty good, that is 18 and 15%. And you can see the sales growth is also good. And the profit growth is 115%. This is the PE chart, price chart. And you can see the CAGR return is 308%. And this is the volume. Though it is just 2-year-old company, it has, since its listing, it has given 11x of its listing price. So today it is trading at around 852, I guess. And it started with around something 79 rupees. And presently, if we look in this particular month or within this year, the volume have been huge. That means you can imagine the amount of and here the sales growth, it is good, and it is up to 63%, whereas profit growth is 5.3. And ROE and ROC, I mentioned that 18 and 15%. And debt to equity ratio is 0.5, and price to cash flow is minus 154. Interest cover ratio is 6.32, and the PAT, that is price after tax, is 0.71. And as I mentioned, the promoter holding is 68%, but as of today's date, it is 62%. And publicly, it is holding this many. There is no, entry of FI and DIS, since it is just a 2-year-old company, and no retailers as of now. And yeah, outside investors, we have Ashish Kacholia and Sharad holding this company's shares with 34 crores and 13 crores respectively. And here are the balance sheet of the company and the share capital, like from 2029 up to, this last year has been missed. So when we see overall figures, they are all pretty good. And these are their assets. Their loan has been increased, but their investments are also like good, and their expectations from the government approvals and different countries are also all positive. Yeah. As far as the strength, when talking of the strength of this company, within 6 months of establishment of the company, it has developed and supplied first indigenously developed bi-directional RF over fiber. What I was talking of that one particular product that is just go ahead. Yeah, wave optics. So yeah, so it has developed and also delivered within 6 months, and the order book today stands at 230 crores, and expected CAGR is expected to grow by 40% in next 3 to 5 years. So we can bet on this company for sure. And they're also aiming to increase by 50% the key products at Halol. That is, Halol is for defense equipments. And collaborating with different countries for technology and manufacturing is ongoing. And since dairy is generating 14%, the EBITDA is 8 to 10% on auto mode, and defense is 20%. So if they close the dairy section also, they will not be under loss. And it has shown good revenue growth of 36% for past, I mean, this is the 3rd year, so past 3 years. And the company has efficient cash conversion cycle of 65 days. The company also has a promoter holding of 62. Here it is 68. It is 62%. What are the limitations is it has a contingent liabilities of 14 crores as of now, and company has negative cash flow of operations this much, and the company is trading at high EBITDA of 77. And here you can see the profit and loss. The net sales has gone from 58 to 63 till March 2023. And net profit has also increased threefold. And this, I think I explained. Yeah. And this is the EBITDA margins. A lower graph is again due to the dairy section. But if we consider only defense section, it is really good. You can see from 2019 to 2024. And the financial performance of the company has been really good. Like you can just see year by year, it has been growing. And the debt has been drastically reduced. And as far as fundraising is concerned, in 2023 Q4, they had these many shares, and amount was this, whereas the present Q3 for 2024, they have raised these many, these many shares are there, and this is the issue price. This is the PE chart. Right now it's yes high. And this is the working capital style. So and this is the present technical chart, how it looks like. So you can see like it was almost in the same phase until now, and you can just check for the volumes that have been participating, and it has drastically rose. It has gone up to 1100, and now presently it is come down to 852, and I see a morning star forming here, and also the support is there. So I myself will be, investing in this Monday. Let me see how it goes. Yeah. And these are the clientele of Krishna. You can see that almost all are government except this L&D. And it's secure because the clientele is government. And as far as the payment is done, I think with present government, it shouldn't be an issue. Yeah, thank you. Yes, Puneet, I'm done.
Amazing. So, first time presentation, and I really loved it.
Thank you.
I've been invested into this company from long time, but you have captured it very beautifully actually. So thanks a lot for this presentation.
Thank you for giving this opportunity. Whereas like when I was given, like I felt like 2-year-old company है तो फिर इसके बारे में क्या ही बताऊंगी. But
really interesting opportunity. Thanks. So guys, the forum is open for questions. And
any queries?
Yeah, this is Veena here, Rashmi. It was a very well presented, amazing presentation.
Thank you, Veena.
Thanks for giving so much details. Just one question I had: have they patented any of those products?
No, not yet. No patent has been done.
Are
But
they
yes, they have a monopoly over the products, but no patent.
okay?
Yeah. Any others?
Rashmi, you said very, very nicely, you covered on the products.
Thank you.
And all this. We really appreciate on that part. One point where in your slide you mentioned the 2-year CAGR or some CAGR is around 300%, 308% in fact.
Yeah.
So don't you think that, I'm just, trying to put up some antithesis that it will go to its mean?
CAGR, I think I showed it for this particular year, but they themselves are very much sure to increase it by 40% with whatever present CAGR they have. They are sure to increase it up to 40%. Since they are betting on their monopoly products and since they don't have any competitors with these particular products.
But even as you mentioned, it is not all patented.
Yeah.
Okay. And there is one another competitor as well. But yes, net, it's all the game of probabilities. Bias.
Probabilities, and somewhere it is a Gujarat company, and yes, the present government, the central government, I mean, all in favor of the company also. And since we have a stable government and they are betting and in sync with many other countries, and since the defense sector is also given a lot of prominence in this particular budget, they are, I mean, sure to rise. So this is what my conviction as well as the intuition says. But not to go with that, even if I go with the statistics also, like it will do pretty much well.
Right. See, I won't comment on the valuations because it's just one. I'm curious on this question. From dairy to defense.
Yeah.
Who played that role, and what triggers were there from dairy to defense?
Actually, they were into only the steel products. When they even started the dairy products also, I mean dairy equipments also. Again, it was to supply for the defense only. They was not like into the normal market. Whatever the steel cans and everything they were producing, again the supply was again for the defense. So I think somewhere the defense came into picture, like they wanted to explore more into that sector.
And they
because
in 2000s, right? For starting for defense, and then
yeah, since it was started by his father, the Ankush Shah's father, Ashwin Shah, and he started it with only 10 lakh capital, and then he was only into dairy. And till date, dairy on automatic mode also it is given 14%. So they don't want to close it because since that is what they started with and it is giving a good returns till date.
So you mentioned defense, dairy, mega kitchen, and what was fourth?
Yeah, when it comes to dairy also, it is catering to the defense sector only.
Okay, it is catering to defense sector.
Yeah.
So they started into the mainstream defense.
Yeah, and it is a 30-year-old company. Though it is listed only 2 years back, but it is a 30-year-old company.
And they started this in somewhere 2006, like bulb bars and all.
Bulb bars was started in 2006.
And this was their first product.
I don't say it is a first product, but whatever they have started, they're all quite unique. And in bulb bar also, they have 19 different sizes. And they don't have and the bulb bars was completely, I mean, 100% import was from Russia. And now it is completely zero from Russia. And it has been only from Krishna either or Starwire.
Can you go on slide number second? And it's a dairy defense mega kitchen. And what was fourth one? Second number slide. Second.
Slide wise. I'm just going slide wise. You let me know. Stainless steel.
Second number 2 only. Just note. Security equipments. So security equipments, what they are for?
They came up with something heavy. I just mentioned one of the product. I need to go through it. But this is started. This vertical is started only recently. That is 2023, I guess. So only 3 were there in picture. The security equipment came in 2023.
So this security equipments again for defense or domestic?
I think that I'm not sure. I didn't go much deep into that particular sector because there was only one product mentioned to it. I'm just scrolling it. Yeah, here it is, like a heavy vehicle factory steel profile in-house development. So I exactly don't know because there was not much information related to this. But as far as the steel products are concerned, they are tested with as low as minus 60 degrees. So it can sustain that. So I just, and just go through it. So it says like it's a specialized steel profile with high tensile and complex because there wasn't much information regarding this. So I didn't add that.
Okay. No.
Good morning.
But, very, very good. I really appreciate it.
Thank you. Thank you.
Can I ask a question? Good morning, Rashmi.
Yes. Who is this?
Vivek Gupta here this side.
Yeah. Hi, Vivek.
Very nice presentation done. I have two questions.
Yeah.
One, with POE ratio of 115, it slightly looks overvalued right now.
Overvalued, yes. As of now, overvalued.
But for that, they need very high PE expansion, which I can see it is happening, but they need more faster, I think.
Because all of their projects, whatever they are into, they are very much confident to complete them within this year.
Yes, I understand. Second thing, I have one more question. I have seen, I think they are tier two suppliers to the Indian defense sector. Like some tenders when it's Navy or they float, the Mazgaon docks and Cochin shipyards, they bid for it. They may be supplying to these Cochin shipyards and Mazgaon docks.
I showed one of this one, right? So they are in collaboration with many other companies within India. So this picture was not clear, but they are supplying or in collaboration or as far as technology is concerned, they are also in sync with many countries as well as many companies within India and outside India.
No, but they're supplying to Mazgaon. Their customers are Mazgaon docks and Cochin shipyards and Garden, these kind of companies.
No. They are their competitors.
The competitors. Oh.
Yeah.
Okay. Because all these companies' valuations have gone skyrocketed. Huh?
I know. Even for me to go for Krishna only because I was looking for any company that was.
All these three companies I'm using, I'm watching.
Yes. I just went through all the companies.
Skyrocketed.
Yes, indeed. It is. I mean, they are all.
So thank you very much. Very nice presentation.
Yeah. Thank you. Yeah. Any more question? I think SKM has raised.
Please go ahead, Surendraji.
Rashmi, Pankaj here.
May I know who is this?
Pankaj.
Pankaj, yeah. Hi, Pankaj.
Good. Yeah, the brick which you talked about, it's a metallic brick or it's with a different material?
Pankaj, you are not audible to me.
What?
Your voice is breaking.
Okay, my question to you is that the brick which you talked about, is this metallic brick or it's with a different, any sort of different material?
I'm not getting your question. Puneet, if you can just repeat the same what he's asking.
I think he's asking about the bricks are metallic or some other material.
Yes, they are all metallic and they're all composition alloys, not exactly. Some are exclusive steel products are different. And as far as this bulb bar or ballast bricks and everything is concerned, they are titanium and chromium. They're all alloys.
And another question, you said that, only 4 quantities of product India is currently manufacturing. What is the name of the product and what is the roughly selling price, or, roughly estimate of that particular item?
That I mentioned in one of the slides, let me just put in that, yeah, like when I was saying weld consumables, this is the alloy of titanium and chromium, and it has 25 lakh to 1 crore. When we speak of this, like we are talking in terms of tons. So yeah, and here it is like the door hatches, where the Krishna Defense already has is in collaboration with the Netherlands company, and it has a stake of 51%. But the expected opportunity with this is 200 to 300 crores. And somewhere here I mentioned one more, I guess. I'll just check it. Not sure where it went, but one particular for 1 ton, 9 lakh is there. So they are quite costly. And when the deal is done, either it is in terms of 1,000, 2,000 systems. I hope I answered your question.
Yeah, thank you.
Yeah, thank you. Yeah, anyone else?
I think we'll move to the next presentation.
Shall I stop
We'll
sharing,
move to-
Puneet?
Yeah, you can stop sharing. We'll move to the next presentation by Pankaj.
Thank you so much.
Thanks a lot once again. Yeah. Yeah, Pankaj ji, all over to you.
Can you able to see my screen?
Yes, but voice is echoing actually.
One minute. Pankaj, I think you're joined from 2 devices. Let's try the echo.
Now it is better, I think.
Am I audible now?
You're audible, but I think the voice is echoing for me. Can
Am I
other guys
audible now?
confirm?
Yeah, that's still echo.
Now it is better, Pankaj, last sentence.
Okay. Can you able to see my screen?
Yes.
Can you able to see this full screen?
Yes.
Okay. First of all, thanks, Puneet, and other team members for giving us an opportunity to present. I'll be presenting company called Spectrum Electric Industrial Limited. As Puneet mentioned in the agenda that I am going to present electrical goods company. But as we move forward, you will understand this company offers much more than what electrical goods which you are talking about. So they are into the different segments. They are planning to expand into the different energies, different market sectors, different product portfolio. They are willing to expand their geographical reach. So we will explain more in detail as we move forward. So Spectrum Electric is basically a Jalgaon-based company. Their head office is based out of Jalgaon. I would say it's a hidden giant is under making, which having very strong manufacturing capabilities that are required for the all international renowned brands. So Spectrum, the code of Spectrum is SPETTRUM. Today's market price is around 2,100 INR per share, and the market cap of this company around 2,800 INR. Our average buying price of this particular stock is around 860, and we hold a good amount of quantities in this particular segment. Standard disclaimer: we are not SEBI registered advisor, or we are not managing any sort of portfolios, but This is whatever we are discussing right now is basically what we understood from this business. And yes, while preparing the PPTs, we came to know that there is a lot to deep dive into this particular company, because it cannot be easy to summarize in 30-40 slides. So we did our level best, and we'll explain more in detail. And this is the beauty of this ALD session. Once you take a pen or pencil or notebook or PPTs, you will understand you don't know too much about this company. So that is thanks to Puneet for initiating all these ALD sessions for us. So company overview. So it's ISO 9001-2015 certified companies. They are basically into the business of designing and manufacturing of electrical components, automobile components, irrigation components as a contract manufacturer. And they are also the component supplier for the leading industry player based on B2B business model. Spectrum journey started with 10x10 shop in Jalgaon. They started with electroplating, and over last 2 decades, they have added allied product and services like sheet metal fabrication, stamping, tool rooms, metal finishing, injection moldings, and various services associated with the OEMs and the companies. Spectrum focus has been always providing a one-stop solution for the manufacture of electrical goods and components in India. So these company offers an integrated design and manufacturing a solution for the local and international recognized brand in the electrical products industry, like Schneider, Siemens, ABB, and that sort of people. They have developed ability to manufacture most of the products from the concept to design stage, and finally delivering to the customer distribution network. So it's an end-to-end solution that they are offering for the customer, which also covers the entire value chain of even designing, concept, design, manufacturing, raw material sourcing, packaging as per like manufacturing as per the client quality standards, maintain the quality checks, doing the packing by themselves, proper tagging, and also the transporting from their factories to the end location. So they are giving a complete end-to-end solution for the customers. As an integrated business enterprises, they are manufacturing and offering end-to-end solutions. Okay. So company overview, it has more than 1,500 total employees. Out of that, 650 employees are there on their payroll. Spectrum supplies the product like metal, plastic, surface coatings, product designing, and tooling solutions. Spectrum has been investing in R&D a lot. It's a part of their strategy, which is required for constant product innovation. And they have set up this in-house R&D setup for the different processes involved in the manufacturing of various products. The facility is well established, well equipped with modern technologies and tools and design and developing. Jalgaon plant has a high precision tool rooms and take various activities of designing and developments of various electrical components. So tool room is equipped with modern and imported indigenized machine to cater the designing and tools requirement. The entire production process is monitored every stage in terms of quality assurance and quality requirement, because the type of client that they are handling is basically the reputed original equipment manufacturer across the globe, like Panasonic, Ligard, ABB, Siemens, Schneider. I would like to mention one point here. This company is not only the supplier for these reputed OEMs. This company is not even a preferred supplier for these OEMs. They consider Spectrum Electric as their preferred partner in their expansion journey or penetrating furthermore into the India as well as outside of India market. So they are the preferred partner for all these OEMs. Always we discussed about the promoter and the promoter quality. So this gentleman is basically the Sarthi, who is a jockey of running this show. In 29 years back, in 1995, Mr. Deepak Chaudhary started his own company with an electroplating plant with a very small office space, 10x10 feet. And he's basically electronic engineers coming from a very humble backgrounds. Gentleman is very humble, have a mindset of sustainable and exponential growth. That's why he said no if that opportunity is not suitable as per their vision, as per their thought process. So they say no to any sort of lucrative opportunities presented to them. Promoter is completely focused on the improving these processes, focusing on the customer satisfactions. He believes that customer is the biggest source of marketing of their products. OEM business plan will be, OEM's business plan is their own business plan. So they need to support OEM with best of the best quality and best prices. He also believes in the team building activities and grooming our own employees. So he's in the process of building the team. Once the team is established, facilities is made, doing the business is relatively easy. So this is his thought process. Why we talked about promoter? Because he's the driver. He knows where to drive his car and up to what limit or what speed limit and up to what long distance he has to drive. So we feel that promoter is very promising. Okay, so promoter thought process and the vision. They go with the flow of OEM and the market directions and market demands. Process improvement is a part of their daily routine process. Create employment for our people and provide them opportunity to grow. Employee retention is quite high in this company. OEM are the main triggers for getting the further business. So is your marketing face to the whole world, and he strongly believe in that. He believes in on their value systems. They generally don't break business ethics and value system just for the sake of business in the near future. They generally don't take any decisions which harms to the shareholders' interest. Look like it's like look like is a sales pitch, but we met the gentleman a couple of times, and we feel that he's a promising guy, and whatever he talks, his walk based on his talk. So company has around 82 acres of land in Jalgaon, which they have total 17 number of plants in Jalgaon, Nasik, Pune, and Bangalore. Currently, only 2 lakh square feet of the area is under manufacturing, which is under the shade, and they have ambitious plan to make them as a 10 lakh square foot factory area. So these are the capacity of electroplating, press components, powder coating, injection moldings, and roll rooms. And this is just a pictorial view where is the head office and manufacturing plants. So this is the way they started the journey in 1994, commencement of electroplating business. He has seen a lot of ups and downs while developing this company from last 29 to 30 years. At one point of time, there were several issues about the cash flows, several issues with the client retention, but he managed to survive during those periods. And now he's willing to take this company at the next level, considering this as one of the conglomerate company out of India. So commencement of business plan, electroplating plant in Nasik in 2003. Manufacturing of injection molding, plastic moldings for the electrical sectors in Jalgaon in 2008. Setting up the fully automated electroplating plant for electrical sectors in Jalgaon in 2010. Manufacturing of precision stamping components in Jalgaon in 2014. They listed in 2018, and they also started the plant in Hyderabad and Bengaluru. In 2022 and 23, they started the electrical charger division. So they are the electrical charger, EV theme is going on. So they are manufacturing the EV chargers for most of the renowned OEMs in the market. So which I know MG Hector is one of them. 2024, they tied up with the Times Internationals and started the medical equipment manufacturing division. So you can understand, they started with a very small shop into 1994, and then now they are planning to expand like anything. It shows their capability. It shows their, like they made the foundation very well for this company, so that it can be exponentially grow from here. In 2014, they started the IT division with a vision to excel their operation globally and acquire the company into the tools and die making divisions. So when I say, they are starting the medical equipment manufacturing, they are venturing into the IT divisions. It shows, they can diversify themselves. The company roots are very strong. The systems are in place. Even, when we visited to the shop floor, like employee retention is very good. Employees are feel involved, motivated, and they work like it's their own company. And this is a culture which he really wanted to implement for a longer period of time. So more about the company, in-house R&D setup with the high precision toolings, integrated design and manufacturing solutions, end-to-end product solution providers with a contract manufacturing model like B2B. It's a low-cost manufacturing. See, in order to expand their profit margins, they are venturing into the different new domains and new segment, which we'll discuss more in detail. As we discussed, 17 plants, 1,500 employees. They have well established. This is one of the USP of this company, like well established, proven track record, and a very strong relationship with the OEMs across the globe. So sales will not be an issue for this company because they are providing high quality products as per the global standards and the requirements. Another USP of this company, spectrum turnaround time for concept to prototype of any supply of the components is well above the industry norms, which is ranging average period of 6 to 9 months. It again depends on the complexity and the components involved in it. This is one of the things which we personally saw with our naked eyes, that Spectrum has fully automated nano coating plant, which is eco-friendly plants with the latest technology by the German company, and this is only first. This is first and only plant in India who does the coating of DB and enclosures coating application. This is basically Zeta coat based, and this plant is very expensive if you compare with the traditional coating plants. So, and whatever machineries he has procured from Japanese manufacturer. He went to Korea. All are reputed manufacturer. They have chosen to select their machineries and plants in their factories. All the manufacturing process and operation has been optimized based on the Japanese process and the mechanism, which helps them to minimize and avoid the defects, mistakes. Another USP of the company is like Spectrum having online statistical monitoring and control softwares through which any OEM can easily track what is the status of their awarded job, like completed units, work in progress, planning of the readiness, when it will be planned. So people sitting outside of India or somewhere in North UK or wherever, they can easily monitor what's going on with their orders. So this is a very unique USP that they have. Spectrum did their level best to do all the necessary backward and forward integrations of their factories. Primary focus on the improvements and streamline their processes. They are still improving, but yes, long way to go for this company. So these are some of the product, some of the things which is not easy for the newcomer to establish to this scale. It's very difficult to establish the proven track record with all the original equipment manufacturer, because every OEMs has their own way of working the things. Every OEM has their own SOPs, their own quality checks. So this company is fulfilling all their requirements. So key strength of the company is one-stop solution. As we discussed, experienced promoter and the management team. SAP implemented as a best practice. State-of-art tooling shop like press tool, injection molding, SPMs, jigs, and features. Research and development, they are investing a lot in the R&D things. This is one of the beauty, like they are getting continuous new orders with the new clients and the new products. Product manufacturing and flexible assembly line that they have, and it's a strong customer base as we discussed. These are the product portfolio which we talked about, like distribution boxes and boards, air conditioner boxes, modular electrical boards, panels, auto components, irrigation components. So these are their traditional product portfolio, and they started with this, but they really wanted to expand furthermore. So new product line that they added is MRI machine and other medical equipments for the OEMs. Product not yet disclosed by the company. They may start product line for the defense sector as well. Again, not sure when they will come up with this, but certainly look like the type of setup that they have, they may expand. Separate product line as their own brands. So this is their one of the product line which they started manufacturing for B2C customers, because B2C is a margin is very high if we compare that with B2B model. And recently they acquired one company for the tools and die manufacturing. So this will be a separate business line for them going forward. So these are the typical product. If you see the quality of this product, you will understand what we are talking about. So they are into the distribution boards, AC boxes, mini MCB, modular electrical boards, lamp angles, surface coating services. This is the services that they offered, like electroplating, depends on the client requirement. So they offer this standalone electroplating services as well. Whether it will be a zinc coating, nickel coating, titanium, copper, silver, gold, depends on what client is looking for. Metal stamping is one of the product line that they have, like one of the services that they provide. Injection molding, they have various injection molding machines under their umbrella, and which is catering to several OEMs. This is a powder coating plant which we talked about. Fully automated plant, no human intervention is required for this plant, and it's very difficult. It required a lot of courage to implement such a type of plant and machineries without the proper vision, or without having proper guideline or confidence from the OEM. They cannot, like, people generally don't invest too much upfront. This is the service business. What is their capability? Ton per annum, we mentioned. This is based on their DRHP. These are the extreme clients. Spectrum clientele includes the renowned companies involved in the manufacturing and selling the branded electrical and auto components. Few players are like Legards, Schneider Electric, Anchor Panasonic, Hangers, ABB, and Time Medical Service is one of the OEM that they have, which is basically for the MRI machine manufacturing. We'll discuss more in detail about what they wanted to do in IT, as well as in the medical equipments. So they recently launched this subsidiary for the digital enterprises services for IT sectors. Their vision is to become the sustainable and reputed organization to help the clientele to adopt the digital technological innovations to increase the business outcome through the improving the worlds. Mission is to help the clients to become digital enterprises, integrating the physical and digital realm. Currently, they are focusing on Australia, India, USA, UK, and Singapore. Business leadership, as we already discussed about Deepak Chaudhary, who is the owner of Spectrum. So, gentleman called Sunil Jangle, he's ex-MD of Accenture. So he will be driving this complete IT offering of Spectrum, and he has a very good experience of managing multi-billion-dollar deals for reputed firms. We'll explain more about his capabilities. So they are mainly the offering of AI, industrial automation, big data, IoT, clouds, low codes, AR, VR, and cybersecurity technologies. So they will be focusing more on the manufacturing, e-commerce, pharmaceuticals, insurance, bankings, retail, and healthcare. As Rashmi already pointed out in the earlier presentation, they started with this dairy product manufacturing. How they ventured into the defense. Similar way, we feel that if you have a visionary leader or visionary promoter, they can expand left, right, center based on their appetites. And that type of zeal I can see in these promoters. So Deepak Chaudhary, as we already discussed, he's a founder, member, and promoter of Spectrum Groups. He has a very good understanding about the market and talent to identify the capitalizing on the new opportunities. He's well known for his innovation thinking, strategic vision, and ability to lead the team towards the success. His vision is to delivering the value-added services and quality products to be recognized globally. And his mission is to recognize Spectrum Group globally to create the valuable services for the global community. Coming back to Mr. Sunil Jangle, he is basically one of the family members of Spectrum Electric. He's a veteran professional, more than 35 years of experience, strategically resilience, IT leaderships. He's directly worked with the extreme leaders like current chairman of Tata Sons. He's a MD and CEO of Oracle Financials, Chief Strategy Officer of Accenture during his work for the TCS and Accenture. He has crafted innovative solutions for multiple mega projects, like each has more than $100 million plus a lot of IT deals, which leads to $5 billion plus pre-sales portfolio, which he has handled. And look like, he's also promising he will take this company to the next level. He worked across Asia Pacific, NA, as well as Europe, across manufacturing, energy mining, chemical, utilities, telecoms, pharmaceuticals, retail, healthcare, and social medias, offering a lot of things related to the IT. I am not IT guy, so I could not able to comment more on their offering. His vision is to establish global technology enterprises. One of the important point, everybody will agree to me, nowadays all these IT firms are basically located into the tier 1 cities like Delhi, Gurgaon, or even Bangalore, in Mumbai or Pune. But going forward, this leadership team has a vision. Why they cannot put their resources or their employees into the tier 2 or tier 3 city to offer a competitive pricing for the IT services. With this vision, they started expanding their base into the small tier 2 and tier 3 city, and hopefully they will be successful of winning that. So these are the offering of the proposed business, like AI-based solutions for field services, customer insights, sales analysis, integrated automation, personalized services, digital twins, recommended products like global ERP, CRM, development, implementation, support, maintenance, realize management, cloud migration. So he is expert in that. So he is expert into offering AI-based solutions, IIoT platform. So this is one of the most important slides, digital talent across key job families as per the data of July 2022 and Jan 2023. So talent shortage will continue across all the traditional and digital technologies. Responsive provider would get a bigger bite of the shortage pies, because since this gentleman is into the same field from last 35 years, he knows where is the gap of demand and supply, what pricing that client is expecting. Because obviously if they go with the Accenture or TCS or big renowned companies, their prices will be 100% more than what Spectrum can offer to the customers. So they are in a plan to, they are discussing, or they have planned to emerge tech hub into Surat, Ahmedabad, Jaipur, Indore, Nagpur, Coimbatore, even in Nasik or in Jalgaon. Make the talent available closer to the client cities, make services more scalable and cost effective. Spectrum would define long-term location strategy for competitive, relevant to the market, and responsive to the need. This is a very important point to consider. Spectrum is driving revenue of roughly 500 crores of sales in next 5 years of time, focusing on achieving the robust profit margins. Because it's a service industry, profit margins are relatively high in this. The top one right-hand side graph shows the demand of the talent in the mainstream digital technologies in 2020-22. So cybersecurity is number one domain. Then cloud and edge computing, big data analysis, IoT, blockchain, robotics, AI, machine learning, AR, VR, and 3D printing. 3D printing, Puneet already covered this. So look like there is a substantial scope or the piece of the cake available on the table, which Spectrum IT management is hungry to get benefit out of it. So this is what we discussed about Spectrum IT. They launched this subsidiary of Spectrum Electric for the medical equipment manufacturing. As you know, medical equipment manufacturing, we were solely depends on the European nation or some developed nations. But now with the vision of our new leadership team, they really forcing people to do the medical equipment manufacturing within the country. So this is their vision. The company called Spectrum Healthcare to become the global, sustainable, and reputed organization to provide the affordable access to the quality healthcare system, and to accelerate the industrialization of the medical equipments, components with rapid technology innovations. Current target is to penetrate India and Southeast Asia from India location. And then next target will Asia Pacific, Middle East, and third target would be USA and Europe. As you see, the product which I shown you earlier, these products are relatively the small products and which has a very relatively a lower operating profit margins. But when we talked about the such a type of medical equipment manufacturing like MRI machines and all, the efforts are relatively less, but so the margin percentage will be much higher than what we are talking about traditional product that Spectrum was offering to the customers. So this is a proposed business prospect, 800 crores INR sales for next 4 years. So this is their vision and this is their plan. Whatever plan we talked about is these are very conservative numbers. So Spectrum Healthcare may operate on the medical device design and manufacturing. It may be a contract manufacturing or complete design and engineering services for the OEMs. They work for the OEM models like white labeling, as they do it like Ligard, Siemens, Schneider. They do manufacturing by themselves, but at the end, these reputed company put their logos. So this is a white labeling category. Product manufacturing, full system for OEMs for B2B models. Merger acquisition, joint venture model, they may go with this direction as well, mainly for the healthcare equipments and the devices. Industrialization of the innovative ideas, commercialization of product and innovation ideas. See, basically, that their setup is very strong. They have their system in place. They have 17 plants across India, so they can easily allocate one or two facilities for similar type of products. And even if they came across any new sector or any new product or offering similar to what they are doing for this OEM, they can easily implement that as a part of their business model. So medical device design and manufacturing, MRI components, contract manufacturing, order agreements is in hand. So roughly, if let's say their OEM got 1,000 crore of orders, why the OEM started it? It's basically the US based company. They started to penetrate into the Indian market because of the push from the government. So if let's say they got 1,000 crore of order, so certainly 20 to 25 or even 30% of the manufacturing piece will certainly come to Spectrum, and exponentially they will grow. Their client will grow in this segment. So these are basically the medical imaging equipments, mainly for diagnostics and interventions. Current their plan is to go with number 1, number 2, and number 3 is their priority area. Number 1, when I say, is a computed CT scan machine, plain radiography X-ray system, MRI machines, as well as the mobile surgical C-arms and X-ray imaging systems, which they have planned to go. One thing I wanted to highlight here, they have recently hired the people from a top-notch MNC, those who are working in these domains. So, people are willing to relocate from themselves from the tier 1 cities to the tier 2 or tier 3 cities. They want a peace of mind. They want to join with the company who has vision, and they can grow exponentially by themselves as well as along with that particular employee. So it's not a big deal for a Spectrum to take any big guys on their management. This is the imperative of this Spectrum healthcare market. The size of the Indian market is around estimated roughly is around 11 billion, which is expected to grow by 50 billion US dollar by 2028. Overall CAGR of roughly 15% over last 3 years. The global medical device market counted around 492 billion in 2022. It will be roughly 656 billion by 2032 with a CAGR of 3 to 4%. This is a global market which we are talking about. India is at a very perfect spot as a preferred manufacturing hub for catering the needs of India subcontinental market, Southeast Asia market, African markets. These markets are typically the value segment market. India is treated as one of the best hub for end-to-end solution for the medical devices like factory fields. Future due to the huge availability of medical devices, SMEs and proven suppliers that are already available within the India. India is in the best place to design anywhere, source anywhere, but build anywhere. So this is a strategy for the medical device for the global MNCs for faster time into the market. More than 80% of the BOM required. India has a proven track record of sourcing all the raw material within India, and India has around at least 25% conservative savings in the landed BOM and the industrialization together.
What else you want?
Into the USA, Japan, and Europe. Excuse me. Okay, few of the matured Indian suppliers are proven players for the system of OEM models. So this is just Make in India. What are the initiatives like investment, innovation, skills, and infrastructure development, which is currently ongoing in India. So this is one of the company which is working very closely on the manufacturing of the medical equipments. This is the Indian device market. Consider medical device is the sunrise sector for Indian economy. Roughly into 2022 is around $11 billion US, expected to grow by 50 billion in next 8 years of time with a CAGR of 16%. The export of the medical device sectors has been growing by 9.3 from last 5 years. The Indian medical market shares the Indian medical market share in the global market is only 1.65%. So there is ample opportunity to grow exponentially from here. India is the 4th largest Asian medical manufacturer after Japan, China, Korea, and amongst the top 20 medical device markets in the world. Currently, India is exporting ventilators, PPEs, diagnostic kits, sanitizers, and surgical gloves only. So there is ample opportunities to penetrate into the various medical device market. So this is just export and import of medical device from last 2 years financials, category-wise export and import data, which we mention with reputed sources. So again, I'm reiterating, it's not an electrical goods company, it's a IT, it's a medical devices, it's various things. Okay, coming back to the fundamental of the company, current market cap is around 3,300 crores. Current price is around 2,100 INR. Stock P is around 168. Obviously, it's a growing company, so they deserve to be this 168 P. But if you calculate the forward P is relatively very less. Going forward, what type of development is going on in this company. ROE, ROC is pretty well. ROC is around 18%. ROE is around 21%. Promoter holding is one of the key points which we need to discuss, which we need to see. It's a 72.5% is still with the promoter. And if you see the public holding, most of the people are from this organization. So you can say promoter holding is roughly more than 75 to 80%. Yeah. The OPM of last 5 years is around 11.2%. PAT is around 19.7 crore. PEG ratio is 7.55, look very high, but it will come down as companies see the growth. 3 years market cap is around 86 crore and 5 years market cap is around 89 crore. So you can understand the market cap of today's and what it was 3 years back. This is the profit loss statement. If you see the sales figure, 147 crore in 2019, and now they're standing with the sales of around 3,030 crore, which doesn't have medical equipments as well as IT solutions or any allied services which they're offering. Operating profit margin, you can say, OPM, you can say, net profit, it was 7 crore in March 2029. It is up by 3 times, around 20 crore of sales. So this is just a summary of the company in terms of fundamentals. It's a financial projections and the growth estimate based on the development. As we discuss ROE, ROC a lot, sales growth is around 32%, profit growth is around 133%. Promoter holding, as we already discussed, debt to equity ratio is 0.52, and market cap was relatively very small 3 years back. So as we discussed, basically they have their own product, they have their own services to offer. They are into the EV charger market. They are also into the IT services. They are also into the medical device manufacturing. They recently acquired a good amount of stake in one die molding company. So 100% there will be a separate revenue generation going forward. So these are very conservative numbers which we put in terms of sale, how it grows from here based on the guidance that the company provided. And certainly, as we discussed, the PAT margin will improve if they focus on the more services and the value-added products. So we feel very conservatively in 2028 and 29, the market cap should be more than 30 to 40,000 crore. And this is the sales growth projected and the profit growth. Look bit weird for the new guys, but this is what has happened in the past for several companies, and certainly it will happen to this company as well. We are pretty much confident on it. So consideration and conclusion, it's a long-term business visibility due to the industry tailwind. Companies in nascent stage of growth, PEG number look like very higher, but it will come down with the future growth. Our projected numbers are considering the till date development within the company. We don't know what will happen after that. Like they may venture into the new segment, they may do JV, they may do some sort of, memorandum of understanding for any big players in the market. So revenue will certainly increase from the current businesses as we discuss EV chargers, medical equipments, tool die business, and IT divisions. We are extremely bullish based on the business model, based on their overall manufacturing setup. It's very difficult to crack that setup what they have established over last 20 years of time. Most important part is the visionary leadership of the promoters and their hunger for sustainable and exponential growth. Spectrum will certainly focus on the B2C segment going forward because the B2C margins are relatively very high, and they may plan into the entering into the EMS services as well, like electronics manufacturing services. Currently, they may expand into the lighting businesses, they may expand into the defense businesses to focus more on the value-added product, services, and industry. And looking at the development, what has happened in this year, they will certainly crack this code. So in summary, I would say it's a one-stop shop for all the solutions that any OEM or customer needs from the Indian market. I have not put any chart because Puneet knows that I am not that fond of making the chart because I do invest in the companies based on the long-term visions, and that's why I have not presented any chart. This is one of the slide which I presented last time as well. Investing in the stock is an art, not a science, and people who have trained to rigidly quantify everything has a big disadvantage as per Mr. Peter Lynch. Because the companies where we are invested, those are not small P companies or having very high handsome amount of ROE, ROC or nothing like that. So this is what we feel and this suits to us. So we made this investing style for ourselves. Thank you, Puneet, for an opportunity. I am open for any sort of discussions and question and answer.
Yeah, wonderful presentation, Pankaj. So it gives me a broader perspective also. As you shared, it's not only electrical goods, but so many other domains also it is venturing into.
Yeah.
Thanks a lot. So one question from the chat which has come for you is, any customers in the medical field?
There is a company called, 1 minute. There is a company called Times Medicals. We mention here.
Okay.
This is the Times Medical System. It's basically UK based company. Started operation in India in the with a focus to penetrate further in the Indian market.
Okay. Yeah, guys, any other questions for Pankaj?
See, jockey plays a very important part, driving any business. We have seen a lot of promoters coming with several ideas. All of a sudden, in 15-20 days, they form the company. They are actually bang on the business model. Anyone else?
Pankaj bhai, this is Mithun.
Yeah, Mithun. Mithun, first of all, congrats to you for Raymond.
Sorry, I could not hear you.
He said congrats for Raymond.
Yo, Raymond, it was nothing in front of your investments.
But most important part, how much allocation that you have is most important part, which I learned from Puneet.
Allocation was decent from my side, but it was okay but
yes,
as in the
Mithun.
kind of stocks you discuss is really awesome. The only regret the last time also I discussed was the RMB infra, as in that was also initiated when it becomes multiple X. This is also multiple X, right?
I sold this 50% stake because I was needing some money, but I'm still holding.
That's nice, as in
I'm still holding Exicon because it has not performed well. It has performed well, but the guidance which their gentleman has given, he has not able to meet that guidelines because of several reasons.
Yeah. I'm tracking Exicon as well as RBM also. RBM I have taken positions also, just to let you know. as I'm also seeing what as in so yours and Suraj Bhai's as in are the one of the gems as in I can say which I definitely wanted to watch
No,
and
no, no. We are
listen.
very small. We are still learning, and we are evolving.
Okay, but regarding this company, you met the promoters also.
Yes.
Okay, and this medical has been incorporated or is started? How it is? As in,
They started developing the concept, and they are working very closely with the OEM.
okay, and there's a company called Sakshi Medical. Have you gone through that company?
No, not really.
Okay, they
Can
are
you
also
text?
into X-ray. Okay,
Okay.
tell me.
Can you text me what is the name of the company?
Sakshi
Sakshi, huh?
Medical. Yeah,
Okay.
Sakshi Medical or Sakshi something like that. I've studied long time back. It's also an SME company, as in big investors have invested something like that. But
Okay.
predominantly their sales also comes from the X-ray machines, as in X-rays, basically those kind of things. I just wonder whether Spectrum will also get into that or not. But it's okay, as in I will check now.
I don't know where
Uh,
they will go, but they are very ambitious.
Fair enough. But and any
So
new, as in guys who have been hired, as in can you share those details, as in who are working in the medical? Because in medical it's very difficult to get into medical, but once you create your niche, then as in you can do wonders, like what happened with Polymedica. As in
Yeah.
this Spectrum can also, in terms of medical only, it can deliver like next Spectrum out of medical only. That's the possibility. That's the only thing which I wanted to understand, that the
Okay.
kind of hire they have. Do you have any idea about the hiring they have done in this field?
Sir, I don't I don't have name of those gentlemen, but I came to know that yes, they are seriously looking after Spectrum Healthcare as one of the prominent product line for them.
Okay. Okay. By any chance you're gonna meet the promoter again ever? Then I can raise some questions. You can just ask those questions. Is it okay? Is it possible?
Sir, you send us a message. We'll try to meet. It's not that easy to
Okay.
meet the promoter, to be very honest.
Yeah. See, I am not trying to meet myself. As in, I tried long time
No, no,
back
no.
once.
I am not saying that, but we will do the best. Yeah.
Okay. Okay. Fair enough. Okay. Awesome study. Awesome study. Very good, sir. Chalo. Thank you.
Thank
That's
you.
it.
Thank you, guys. Sir, one more thing, whenever we see this development in this company, we feel that why we could not add more quantities at that point of time. But it's a parts of regret game, and we are getting
Yes, I was
regrets.
about to say. It's a game of regrets, but it's you invested around 600 rupees, right? As in,
No, average price is around 860 something. Yeah.
okay, average price is 860. That is also very good if you ask me. But at that price also, if at all I see behind the scene at that time when you were buying, it was around few hundreds. As in, that's where Gunawant, his wife's name, has been invested around. So I would have thought about, अरे यार ये पहले से भाग गया अभी और क्या भागेगा. Now in the hindsight, I think 860 is a good price.
Yeah.
yeah, one more question for you is on the PAT to CFO conversion, basically. So, but I think the answer from Pankaj would be like these are evolving companies and possibly CFO and PAT may improve with time, basically.
Certainly, yes.
Okay, any other question, guys? If no, then we should move towards fastest fingers first. And I hope
Before
you
that,
listen to
Puneet,
the
this is
presentation.
Amar.
Yeah, Amar.
Not a question. Just want to congratulate the Sully brothers, both Suraj and Pankaj. They are the real hidden gem masters of our group. This is something which I would like to aspire by. I would want to go there, but मेरे लिए दिल्ली दूर है. But Pankaj bhai छा गए. This was a
अरे नहीं भाई,
good
कुछ नहीं है.
presentation and the company was good. Very nice.
Yes. Thank you, sir.
Puneet, I have one question regarding the yesterday one company, the Swan Energy we discussed.
Yeah.
I was just reading today, BlackRock is buying a part in that. Have you heard about this news?
Yes. Already shared by two people yesterday that they are buying. They have bought it recently.
At 680 rupees something.
Yeah.
Sorry. Okay.
Recently only this news came. They taken some
10th of June, right?
Yeah.
660.
BlackRock's
Right. 660.
2
Yeah, that's correct news basically. If you want to check that veracity, yes, it's correct news.
The correct news. 668 rupees 0.3. Okay.
And that number I am not remembering. But news is correct.
They bought 2.46 million shares at 668.3 rupees.
Okay.
Great. Thank you.
Thank you, Pankaj bhai.
Thank you, sir.
So I will share my screen again. So you can stop sharing, Pankaj.
Yeah.
I hope you guys are able to see my screen. Just confirm me once before we move to the
Yes.
fastest.
Yeah,
Yes.
Yes, yes.
Okay.
We can.
Good. So just before we go there, so we have a next batch for mentorship starting from 21st July. And those who want to learn fundamentals and technicals, please DM me. Take it from there. And I want to really appreciate the people who are presenting because a lot of effort goes in the background. It takes a lot of hours to put the things on paper. People who are presenting are really taken that next step in their journey. So I wish them success on this part. And now coming to the audience, fastest finger. Yesterday questions we have taken. Question number 3 we should be looking for. Yeah. So we are coming to the questions, and how to answer is you have to choose the options basically A, B, C, D. You have to write in the chat. So we are moving to the question for today. Spectrum Electrical has how many manufacturing plants? 9, 13, 17 or 9? Okay, I think enough answers there. Somebody can put a word break in between so that the next question, before we go to the next question, we can declassify the answers between two questions. Okay, we are moving to the next question. Which of the products belong to the business of Krishna Defense out of these 4? It's an easy one. Okay, so we'll stop here for the morning session. We are on time despite a small hiccup in the early morning, but we have covered it well thanks to presenters. So we'll reconvene at 1:15 and Ankit would be taking us over for a textile company. So we will join back at 1:15. Okay, so I will stop the session here. And I will come back with who's the winner of this fastest fingers by analyzing the answers. Thank you.